Okay.
Okay.
That's probably safe.
All right. Yes. And you are now recording. So how is everybody's budget? You've got more money than you know what to do with?
Pretty much.
Very funny.
Well, we underspent programs by quite a bit.
Yeah.
And we had a staff position that we haven't filled since COVID. So we have money in that account. But we've overspent our maintenance budget and our furniture, because that's our supplies. We kind of took some of the COVID stuff out of both of those. So we are going to talk at board meeting tomorrow night about revamping some of the budget. Do we need to do that? Do we need to make a formal motion that we're changing the 2020 budget as approved? Is that a necessary thing to have in the minutes?
Well, we do. I would suggest that now, between now and December, you don't have to do it right now, but if you, sometime in this last quarter is when you ought to be looking at where you think you're going to be, how you're spending money actually. Go in and look at what you had guessed for an internal budget when you did your budgeting this summer, and then go in and see how you're actually spending and readjust the 2021 budget as you think you need to. More in supplies, more in this, less in this.
So when you say adjust, you just mean fluctuate from one line item to another. You don't mean changing actual numbers.
I mean, yeah, move the lumps up and around, but don't change the bottom line. The dollar amount at the bottom of approved expenditure is the same.
Right.
And that means we don't have to take it, we don't have to have another budget hearing or anything like that.
No.
But we can change our internal budget.
Yes, you can massage those.
Okay.
So what is Diana talking about then, outside the internal budget, Diana? Or because we don't go to the board for any of those changes or fluctuations ever.
Well, when we report on our budget each month, they look at, okay, how are we tracking expenditures throughout the year? So like right now, I think our maintenance other is at 107% of what we talked about at the beginning of the year.
Yeah.
So I'm just going to say, look, we need to kind of re-look at the 2020 budget, what we're spending, and so that they'll see that we're spending less here, but more here. And we're actually going to move more into capital improvement than we had budgeted because we have money left over. So,
right.
Well,
Gotcha.
I have a question. Just for the sake of analyzing and preparing for 2022, since 2020 is, I have no words. If you manipulate, that's the word I was looking for. If you manipulate your budget to show how you're actually, I think, correct me if I'm wrong, is that doing a disservice to your budgeting process in the future if you move everything around because of 2020, instead of just saying, yes, we were over in, or we were way under in collections because we couldn't get any books, or we were way under in programming because people couldn't come into the library, because it'll play out, and so it'll show when you're at 107% in supplies and you're at 50% in programming. You can attribute whys and what fors instead of manipulating and moving the numbers around. So which is better to do?
Well, I would only move my numbers if I move them at all. Can you see my screen on our budget?
Yes,
Mhm.
ma'am.
Okay, this is 2021 and we've got it all marked up, but and you'll notice we have a lot of comments because you forget from year to year. So if your budget doesn't have, you know, little comments that pop up, you're going to forget all the things because you do put different things in different pockets over time. I think Diana could probably understand it best, and Sharon maybe a little bit. I used to gripe a lot because Jim moved things constantly. So you'd have 1 year of accounting with things in these pockets, and then for the next year I'd have to create new pockets and shift things around. And I'm sure Lisa feels the same way.
And that's my concern.
Well, but that's just based on, that was just based on, he would add a different category. We would take a look at our programming areas and we would have different weightings of salary in a year. We would have maybe different things that came up in the upcoming year we were going to do. And so we had different amounts of money in there. That's just normal life, but that was just once a year. So as we were planning for like this summer, 2021, and we're looking at things, if you'll notice, I'm just saying this grand total has to stay the same, but as you're looking at how 20 is, and if you're thinking 21 is going to be more of the same, you may want to up your budget in supplies for 2021. I wouldn't change it again. And you're exactly right, those discussions about why you're over and under are important. If you move things around a lot, you're never going to grasp really visually for your board that you're going over some things and under some things and why. So I'm just looking at this, for example, if utilities are going up significantly next year, I would have more in the utility line because that's not likely a pandemic response. That's a inflationary pressure.
Right.
And so once a year, I might adjust for inflationary pressure. And other than that, I'm going to, or something I know I'm going to be spending more in the next year. Does that make sense?
Mhm. Yep.
But you know, this is to me what, this works for me, but your internal budget should really have some of these components. I do program areas across the top, but, and I do line items down the side. We have always done a combined budget. I think it's more helpful for you when you go into looking at your treasury funds, your report of your dollars in pockets to the board, your treasurer's report.
Mhm.
But this is the time of year you should look and see, oh, you know, the cataloging that we do, the OCLC charges, Cat Express charges we get or whatever have gone up. We're going to put more in that line. I would get a final budget approved and not mess with it anymore. And then just look at, are we spending over or under where we thought we would be and why?
How do we deal with the carryover? Because we had budgeted 247,000. I'm only finding that we're going to spend about 206. So that's like a $40,000 carryover.
Well,
on top of what we thought we were going to carry over. So, and I know that we can up our capital improvement fund
Mhm.
contribution. So the
Right.
11,000 of miscellaneous that's not taxing, we can add on to our 10% of ad valorem. Is that right?
All taxes.
Oh, it's 10% of all taxes. Okay, good.
That was one of the questions we got, and it's 10% of all taxes. Now, we're
Lori,
not
you went away.
Yeah, that's
10% of all
because yeah,
taxes.
my
Okay,
bad.
so we can up that a little bit as well.
Right.
Wait. Time out, please. We can up what?
All right, this isn't on the screen. Let me stop this share.
Capital improvement fund contribution.
Let me see what I got going here. I think maybe this one would be better to put up. Now give me a sec. Da, 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 da. Are you seeing this screw? Oh, got to hit one more button. There you go. All right, so we're now let me zoom this just a little bit.
Zoom down in the corner, Pete.
Okay, there you go.
While you're doing that, Laura, can I ask
Sure.
everyone else, does your budget setup look like the NEKLS one? Do you have your programmings across the programs? No.
No.
Does anybody?
No.
I can only see like 2 people.
So
Well,
you're only going to have one column then, or two. One
Yeah.
for general fund and one for employee benefits, and one for, well, three categories. One for general, one for employee benefits, and one for capital. Now you could break general down, all of you could break it down into operating and restricted donations.
I
You know,
break the general fund down into operating expenses.
Okay, I have a request. Can we all share our internal spreadsheets?
yes.
So
Yeah.
we can see, I'd like to see Carol's, I'd like to see Kirsten's, I'd like to see Diana's, y'all can see mine. Because
How
it
about-
could be we want to steal ideas from each other.
Definitely. So I would suggest, Mike, would you set up a Google folder for district financial documents and share out to all our district libraries, and you can put your documents in there and share out?
And maybe it's me,
And-
but I would love to be able to see what other people
Well,
are
I think
doing.
I think that the best thing that can happen by sharing is important. I went to the budget sheet that we share, the itemized budget. We call it itemized budget, but we're sharing. This is budget to actual of income, okay, and there are the expenses are up above. But if you look at this, we have got money in these pockets for income. Now you can put any amount of any other kind of money except state aid, 100% of it in capital improvement. So at the county tax money up here, it's 10% of that annual budget amount. And let me see if I can do a pointer.
It's 10% of the general fund, right?
And this is just general fund.
So that is a caveat. It's not all taxes, it's
No.
10% of general fund
General fund.
taxes,
Right,
but not
right.
just ad valorem. Okay.
But not,
Right.
but it would be motor vehicle wreck, the 16-20 ton truck, the delinquent, the other taxes, the commercial vehicle, and the watercraft.
Yeah.
So
But
I've
did you
got,
say-
so
Who
can
said
I
that?
ask a question real quick? So are you talking about how much can be moved to capital improvement?
Right.
Yes.
Okay. So I've got a technician here working on the HVAC system, so I'm in and out. But so it is 10% of all
all
ad
tax.
valorem motor vehicle taxes,
All
All
For the
all
general
quote
fund.
taxes. In
all
the
taxes. Just no donations or anything like that, or services or anything like that. It's just taxes.
Well,
Yes.
that's the only one that has a limiter. Taxes are, you can only put 10% of that money away.
Into the capital improvement.
Right.
Okay.
Donations. So if I were looking at this, I could put all my E-rate income in. I could put all my fees from NEKLS in.
Oh,
I could put all my miscellaneous income from workshops and other things that, you know, we buy for you and you pay us back, and it's miscellaneous income.
But you can't use that as to move to capital improvement, right?
Yes, you can.
You can. So
You
all
can.
services.
It's not taxed.
Yeah. So your NEKLS, your $1,000 that you're going to get, you got
Right.
this year from NEKLS, that could all go in there.
That can all go to the capital. 10% of all of that income can go to capital improvement.
10%
10% of tax money and 100% of any other kind of money.
If
So
I give you $1 million,
Yeah.
it
Okay,
all goes
gotcha.
in.
So
But I
I
have
could put all the money that I get from grants and stuff into capital improvement in addition to.
Sure.
10%.
Okay.
Yeah.
Thank
That's
you.
correct.
Yeah,
Now-
no, which is great because that's like $26,000 for the 10% plus another 12 because we've gotten grants. So I think that'll help.
Well, now you're going to show in your carryover, then you've reclassified some of that money as grant money. But, you know, what I'm saying is there is no reason why, because it's easy to move out of capital.
Yeah. Okay, but I heard somebody say, I think it was Sharon, but I'm not sure, that we can move more than 10% just this year because of COVID.
I haven't heard that.
No, it's true. You can use 10% of tax money because it's limited by.
But nothing's changed.
Right.
Nothing's changed. Okay.
Right.
Mm-mm.
Right.
Well, dang.
At least for us, it has not changed. I'm not
Well,
aware.
you'd be the first to know.
I'd like to think so, but not necessarily true.
You
But
have a pipeline.
you know, the thing to realize as as we were getting together this before everybody got here, we were showing, you were showing the letter you got from your county about your valuation, your final valuation. Yeah, there it goes. Sharon's showing you. You should each get a letter like that from your county. If you don't get one by, say, November 15th, shoot them an email and say, hey, could I have the letter with the final valuation? Leavenworth County is actually early. They don't have to have, they have until October 31st. They have to have it done by November 1st. So Leavenworth County has their final valuation numbers done early.
And
But
Diana,
the rest,
I just went down.
so Diana, you should be getting
She might already have it.
that. Yeah, it's the pits, isn't it? Yeah, anyway. So you should see a letter from your taxing county in November at the latest about what final valuation is. And I told Sharon, since you all only have one county involved, I would staple it to the back of my budget or the front of my budget and just file them
Just
that
file.
way.
Okay.
We don't do that because we have 11 of them. And so we keep them in a yearly folder. So that kind of answers the question about how much you can put in capital improvement, go into the handy book. And Mike, if you want to look up the online version of the handy book, I think it's up. And if it's not, the one that's there would be okay. Read the section on capital improvement. Jim always felt that since we were 11 counties, taxing counties, we were going to be so transparent that, you know, as a pane of glass. So whenever we pulled money from capital improvement that we hadn't planned on during a year, we would republish our budget, because that would be the only thing that changes, not the taxes, but we would show pulling money into general fund from capital improvement. And that really only happened twice.
Question.
Yes.
Okay, so we had a situation where the you know, this was a not having a director issue, where the 2020 budget included like a lot of capital outlay, like $36,000 in capital outlay. The board misunderstood and paid for all of that out of the capital improvement fund. So you guys have said that we can recharge or pay back that money.
Right.
So I'm guessing what we would do is cut a check from the general fund to the capital improvement fund and then journal entry it to recharge or to reclassify. Is
Yeah.
that the
And Lisa, you'd be willing to walk them through that, right?
yeah.
Yeah, you're reclassifying. You're going to have a, you're going to have to repay the capital improvement fund.
And we can do that with just one check. Just
Right.
and then
Grand total check. And then
Yeah.
the detail on the journal entry is going to show what
why
check
we're-
you're reclassifying.
Okay. All right. So it'll be kind of a pain in the butt, but that was one way to decrease that. I mean, that's almost $20,000 that we need to decrease the general fund carryover.
Right.
That will help you a lot.
Yeah. Well, I found in the 2020 budget, I found so many things were double counted. The general fund included the employee benefit fund, so that's an extra $10,000. It's just bloated. It's a bloated budget, and it's just frustrating. You know, that's being compounded now that we're underspending because we had a vacancy and because we also have an unfilled position, and we have, you know, all these things that we thought we were going to spend that we haven't.
Yeah.
Plus, we don't have to pay the $30,000 on the building anymore. So that was the other huge blow to the budget. That it's going to take us more than 2 years to get state aid back, because I don't know how we're going to go back to where we were last year. We just
Well,
don't have that need.
Well, you might look at some digital resources. There's several things you can do. While I have this one screen up, I'm gonna close your eyes. So here is what this itemized budget has several categories. So we're showing the expenses, and these are our line item expenses here. So we show what we budgeted from that budget form. We show where we are year to date and how we're doing. And you can see we've overspent some lines and we've underspent some lines. Yeah, if you overspend some, you have to underspend some others. But right now we're sitting at 58% of anticipated expenses. So that means we're going to end up wildly overspending our capital outlay, because we're going to pay for a lot of this building renovation out of general operations. Of course, we've got one more huge grant check run to do and a few other things. As Lisa reminds me, we have some call on the money. And we also have a position we did not fill this year. We intended to, and things quickly went sideways, and we weren't going to hire someone new to the NEKLS team and have them only
Work from home.
work from home. Not going to happen.
So are you able then to carry over that salary to
Yeah,
next year?
there's no, the other question we got,
Well, that was for me, and that was because we had budgeted in 2020 to add on to our parking lot,
right,
which was like $87,000, and that's just not going to happen because whatever, it's 2020. So can we just, we can carry that over. The county clerk said we can carry that over as long as we spend it on a parking lot next year, that we can't spend it on
Really?
anything else.
that's not
There's
true.
no way, that's not true. Oh, thank you, Laura, for saying that's not true. Because I'm like,
Okay.
You know,
that's not a
you
thing.
could change your you could change your mind. It was you, in other words, your general fund levy anticipated spending, you had part of your budget for this year was $87,000 for a parking lot that you're
Right.
not doing.
Right.
Now you have two ways of looking at that. You can carry it over and intend to spend it again next year. And if you don't get it done, you could carry it over and intend to spend it in 2022. Or you could put that money as part of your reducing your carryover, put it back into capital improvement and pull it out when you do your parking lot.
But we can carry it over without
Sure.
penalty. Okay.
You can carry
Wait,
it
wait, wait,
over,
wait.
but the important thing is whatever you carry over for a project, you don't have to say the same project, but you could say construction project down in your budget of the same amount.
Okay, I have big questions. Huge questions. If you carry it over, it reduces from what you're asking for the next year, right?
No, because you should have a corresponding expense amount of the same amount. So if I'm carrying that 87,000 up at the top as carryover, in next year's budget, I'm going to show $87,000 for capital improvement of some kind.
But Diana, did you do that?
When is that a thing? Since when is that a thing? She's not pulling it out of capital improvement. She's pulling it out of the general fund, right?
Right. She budgeted for it. So, so here you see on this sheet here where I have capital outlay. Hey, Mike, tell me again where that stupid pointer went. Under more? No. Annotate. If I want a pointer, where am I looking? I can't hear you.
Maybe under annotate, grab the arrow.
Okay, annotate. Last time I was here and I wasn't a host, it was under more. Okay, annotate, mouse. I feel like I'm running my cursor around, but so you can see this. You see this capital outlay line?
Yeah.
When we get all done with this year, you see how we budgeted $16,900? We're going to have spent about $350,000 in that line.
Okay.
Because we're choosing to spend general fund dollars for our renovation because we have less expenses than we thought we'd have by far.
Right. So you're using
General fund dollars.
You're using general fund dollars for capital outlay projects. I
Right.
get that. What I don't understand is how so basically you're just predating it or post-dating it.
No,
You're paying for it. You're paying for it in 2020.
she's
and
not
it's a
paying.
journal entry.
No, she's got more money in the bank at the end of the year than she intended to have. And which is her carryover. But part of that was the money that she intended to spend on the parking lot. So for her 2021 budget, she's going to have a line that says capital outlay parking lot for $87,000 of expense. So up at the top, she's anticipating, you know, when I teach the class, I put income and expenses all on one page. If you go back to what I've done in those budget classes, I've got to get people, this is your income and here are your expenses. So if I'm going to have an income line of 87,000 and in this for 20, now I can see I've lost you. So for 2021, that 87,000 is going to sit up in carry over instead of being an income.
Right, and therefore.
And then down and down on the bottom in the expenses, I'm going to put parking lot, $87,000. And so those two amounts of money cancel each other out.
Mm-hmm.
You
And
can
it
draw.
shouldn't impact the
Yes.
mill? Okay.
Yeah, so it isn't going to force you to drop your mill. If you didn't have the expense at the bottom, the net way you'd work through that would drop your mill. So if I had $200,000 of carryover, of which 87,000 was that parking lot, right?
Oh, I understand what you're saying. I've been doing this for 18 years, and this is the first time anyone has ever said that you can take money from one year to the next, earmarked for a certain project, and it not count as unencumbered cash and be reduced from the budget that you, or the amount that you asked for the next year.
It is in unencumbered, technically it is in unencumbered cash. Although you already have a purpose defined for the money. You don't have to encumber it. Although you could do that too if you wanted to make the expenditure in 2020. And I can tell
That large?
I thought it was encumbered.
no.
That we can't spend it on anything else but the parking lot.
Well, how did you raise the money? Just as general fund money?
Mm-hmm.
Yeah, well then that's not encumbered. You only encumber for things that you have a specific. I wouldn't encumber it because you don't have an invoice. You don't have a bill.
Right.
So that
Okay.
was my question. So essentially you're paying for it in 2020.
Yes, I raised the money in
And
2020. I'm just not going to write the check till 2021.
okay. And so you basically have a journal entry that says, okay.
You wouldn't have to have a
got it.
journal. It becomes part of that unencumbered cash up at the very top. It's how much was in your bank account. But however much you carry over in a year, that unencumbered cash reflects payroll expenses, some book orders, some maybe furniture purchase that you're going to do before you get your new tax money. Right? No?
So I'm a visual person.
Okay.
It might be helpful
Well, find the
if we can to kind of show how this would play out on the form.
okay.
We're talking about the general form of the special budget worksheet, right? That's what, when she keeps talking about, that's what I'm seeing in my head is the yellow at the top and then the green and then the, yeah. So
Sure.
that's the sheet I'm seeing in my head. Okay.
Yes. So Mike, call up one. I'll stop share. Have you found one?
Hit Basers, because I want to see how she did it.
You want me to go to municipal budgets and find?
Yes, just pull up Baser's 2020 budget or 2021 budget.
And Diana, had you guys already made that decision while you were doing your 2021 budget?
Yeah, probably.
Yes.
Okay.
Yeah.
And so did you do like she said, and you have down in the expenses a capital outlay that matches the
That
amount?
carry over.
My brain just hemorrhaged.
Yeah.
Oh, don't,
Yeah.
I'm
Yeah.
sorry. Sorry. This is really a hard thing to do with sharing a screen because I would have had handouts and you could have 3 of them in front of you at one time. It would help. It really would. And Lisa, you can stomp on me and say, hush, explain it this way.
I think you're doing okay so far. I do think
Okay.
it'll help to have something to look at because it'll make a little more sense, I think.
Yeah.
Hey, Jerry.
So,
Hi, Jerry. Oh, you're just in time, sweetie.
all right. General fund.
That one.
No. Yeah.
The Gen
Keep
tab.
going.
That's the
Keep
certificate.
going to the general fund. The place that's got debt service at the top and then library
That
at the
one.
bottom. And then
Yeah, okay.
Yeah, that one.
zoom it out so we
Yeah.
only see the library. Oh, well, this is, what am I talking about?
Okay.
Yeah,
All
this
right.
is it.
So she would have in her unencumbered cash balance for 2021, which would,
So this is last year's. Okay.
so she would add 87,000 to that dollar number that's there, say. See that unencumbered cash number, she's going to have the 87,000 reflected in it. And she knows that's right because it's the total of all general fund money she's got in her bank account of
Right.
any type.
Right.
Okay.
Mhm.
I totally get that.
Now, she
there it is, down
knows
there.
that this year she had on here new parking lot $87,000. It didn't happen. So she in 2021 is going to show that same line item, new parking lot 87,000, and she's going to put 87,000 in 2021. And she can now change 2020 to 0.
But you don't have to do that. You don't have to go back and.
Yes, you do, because what's going to happen is this is going to be 2021 column right here. This will be the 2020 column, and you're doing this current year estimated, yeah. That becomes current year of 2020.
Oh, you mean down here. So current year, so instead of saying the
87,000.
it would say 0 to show that they didn't spend it. But she
Right.
doesn't have to republish her current budget.
No. Right. You update these expense numbers when you
Actual.
do this state budget form. You put actual here and you put your best guess here.
Down there. Okay.
And so for 2020, she's going to know that she didn't get that done, isn't going to do it. So for her 2021 budget, if she had that and we could see it, it's going to have a 0 there for 2020, and it's going to have a 87,000 for 2021.
Okay. One of my favorite movie lines from Philadelphia. This is going to take you back a minute. Explain it to me like I'm a 3-year-old. And I know you've been trying, but I'm a very difficult 3-year-old. Okay.
Okay, so
wait. Okay, so any year, it has nothing to do with COVID, has nothing to do with 2020. Any given year, Lewisburg Library can say, hey, we were going to spend 50 grand on X, but we didn't get around to it. So we're just gonna throw it up there in unencumbered cash and spend it next year
right,
on said X.
but it could be,
And it's not going to be rolled into unencumbered cash balance, and it's not going to be reduced from the amount of money that we ask for that next year.
That's 50% right. So,
Oh,
okay. All right. Different visual. All right.
I'm
my
sorry.
parking
And if
lot-
I need that,
no,
if everybody
no.
else gets it and we just need to have a one-on-one, that's fine. I don't want to hold everybody up if everybody understands but me.
Okay, good. Blank form. So this is of course locked. You know, you put your actual 2019, which Diana did. She put her estimate for 2020 in, and that line down here, I can't do it, of course, that
Right.
said new parking lot. She changes in this column, in the 2020 column, she changes the 87,000 to 0.
And that changes
In
her carryover?
expenditures.
And that changes her carryover, does it not? Because she's dropped the expense by 87.
So you have it.
When she was doing her budget, she was for 2021, she was telegraphing, she was saying, you know, and somebody might have looked at this form and said, how, I thought we were doing that this year and you told us that last year. And she says, with COVID, we didn't get around to it. So we're going to keep the money and spend it for this.
Okay.
To your point, if I were going to use this for a large digital purchase, you know, for and I had 87,000 I was going to spend on some internal collection software for, you know, our library members or books, or, you know, I was going to do overdrive and commit $87,000. And I had a line that said overdrive 87,000. And I decided, based on the way that overdrive had acquired RB Digital and a few other things, I wasn't going to go with overdrive. I was going to now spend it on a parking lot. The overdrive line would be 0 and the new parking lot would be 87. I can reclassify that money in any way I want.
Without having to
Oh
take
my
it and get it voted on?
Oh my God.
Well, you know, ultimately this budget's going for approval. And when you do a budget, it isn't a commitment. It isn't a in blood commitment to spend the money exactly as you have it in a budget. The budget is your best guess. And then you true it up periodically to reflect what really is going to go on in your world, which is why that 87,000, if you zero it out, goes up here to the top to the unencumbered cash.
Okay, I got a question then.
All right.
So how my current year estimates for 2020, and I'm looking at the sheet that was approved and that we published and everything. My estimates for expenses are wrong. They're not even, I mean,
They always are.
They're not good. What level of error needs to be republished? Like, how wrong do I have to be before this is just
They're
crap?
always going to be wrong.
That's exactly
They're
right.
estimates, sweetie pie. They're always going to be wrong. Your budget and your cash have nothing to do with each other.
What if they're off by like $50,000, $100,000, and I only have a $200,000
Yeah.
budget?
You just had a bad year, but you're looking at the state budget form here.
Mm-hmm.
That's where you have to come back to your internal budget documents. And your internal budget documents are going to reflect what's really going on.
So this will be trued up next year.
Yes,
Okay.
once a year.
Okay.
The state budget form is trued up.
Okay. So this is a snapshot. Treat it as a snapshot. Know that it's not right.
Yeah, and in 2 years you'll put in the actuals.
Right.
Like, that's what I meant to say.
Okay. So it'll be trued up.
It gets trued up. You know, these are, so the far right-hand column is your ultimate guess. The
Right.
center column is your, you know, at the
Educated
point
guess.
you're doing this, it's 50% actual and 50% guess. And that far left column is 100% what happened.
Okay, thank you. That makes it, logically, that makes more sense.
Okay.
Okay.
Okay. So that's why I said on your internal budget, you start with, you know, those numbers for 2021 that were put there is what you put in that. You could start with the far right-hand corner and break it out into your other programs if you want to. What we end up doing, you've got to have a good internal budget document.
Laura, would you like me to stop sharing this blank
Yeah,
form?
maybe.
Okay.
Maybe, and let me share. I'm gonna, you can, well, let me share this one first. I want to say a couple things. So this is an internal budget document. We don't mess with it a whole lot after we get a final approval. In fact, we don't mess with it at all unless we bring it back to the board and say, hey, we got to really shift some things. And that's only, in fact, I don't think that's ever happened. So this isn't, this document here would be what I would be working with my board for 2021 if I have to change a pocket. If you think of the line items as pockets, if I'm going to change the size of the pockets, do it now and then compare against it all next year. That make any sense at all? Okay, and these are, you'll notice here, this is not, this is where the words have three meanings. These are line items and program areas, and they have employee benefit money and general fund money mixed within them.
Oh.
Okay, for
Oh,
this
we didn't do
budget.
that. Yeah, we didn't do that on ours.
Well, I have an employee benefits line.
Hmm.
And
I don't think I did.
you can make those agree or not agree. I'm not even going to go there. So I have the grand totals of those all those different Social Security, Medicare, withholding, unemployment. We have those all percentaged out. Lisa has much more gray hair since she started working for us, right?
So
Yes.
what you've got on the top column is how you break out the income that comes in, right?
Well, it's the expense piece of the state budget form, the expenses, all, but you know, how you have a general fund, and if you have an employee benefit fund, you have employee benefit expenses. We've taken those two expenses and combined them on one document. This doesn't reflect income at all.
Okay.
This is how, if I'm Dave Ramsey, this is how I've made every piece, every penny where it talk about where it lives. Okay, laugh at me.
So Laura, for
love
this
it.
to match our budget, column B through I would be hidden.
Sure.
Because our budgets are just the line items, the estimated totals for 2021,
Right.
the budget, which is the totals for 2020, the percent change. Yeah. So
Yeah.
our budgets
right.
are basically just J, K, L, M, and N.
Right. You have A, B, J, K, L, M, and N. You have a much smaller one. I would challenge you as you get better at this, that maybe you want to make your money talk in different areas intentionally. So I not only have in that salaries and employee benefits, that's kind of where we started with this, is we had different amounts of staff time invested in those program areas.
So we could do like a youth services program, adult services program, And then
Right.
everything else, and then we could see the expense of youth services versus the value of it. Yeah, I mean, I understand how we could
It will help
do
you
that.
tell
I
your
won't say
story
complicate, but
better. It will help you tell your story better.
yeah.
Okay. So I'm going to stop sharing that. I want to go back and minimize that and find. Okay, trying to get that over on the other screen. Share and this one and here. So you can see this now. Do I need to make this bigger?
Mm-mm.
Okay. So this is, when I say a treasurer's report, I'm taking, you know, I told you that budget was the expenses combined of the general fund and an employee benefit fund if you have one. This piece doesn't itemize the expenses. It puts them in categories, but the detail of that is on your itemized budget and your checks for the month. What this does is it looks at your different funds. So you've got general fund money here, and we have it broken up into these. These are all the different shades of green, if you want to think about it this way, but we're going to keep track of our general fund money and operations petty cash, our state grant, our encumbered funds if we have them. Of course, we have the courier sit here and Apple. We have employee benefit fund and we have a capital improvement fund. And so this checks, it tracks all the income that came in these different fund areas. And then as you go down, it has less the checks issued and the certain, you know, things we have. And then this is the dollar amount that is left in that particular fund. So I'm tracking the operating fund. Is this making sense? And I'm tracking how much money I actually physically spent in the payroll, you know, for employee benefits. And I know it balances because by the breakout of all the different fund categories equals the total amount of money I have in the bank in my
This is
various.
the part I have never, ever, ever got a report like this to work. And I tried for 8 years at Huntington Valley and I could not get it to true up. And it was mainly because of liabilities, like payroll liabilities and tax liabilities kept tripping me up.
Okay,
I
well,
would love to be able to do this successfully at least once.
yeah.
We
Okay, well,
tried. We did that end of year report. Do we have to do that, or what? We did ours after the fact, so it was really not useful to give to the treasurer. But is that what that thing is for, that EOY report? Or is that something just our treasurer requires?
she might just like to do that. And it's a good thing. We have one of these that is our final end of year that's gone through all the audit adjustments and you know, as Lisa can tell you, then you have to take it back to the board and get it a board reapprove it because you've moved some money. You haven't changed totals, but you've moved things into a different pocket. Anyway, the big point here is if I were you and I had an operating fund and I had petty cash, which you all probably do, you have a state grant, and we carry that money in there and we move it in December. We don't care. We could characterize it, you know, for you, if you had a thing that said state aid as an expense, and you should probably for your money. You can add that as a class in QuickBooks. And so anytime you expend money that's state aid, you know, for book order, just class it state aid, and then if you had to pop the records up for an audit, you'd have it. But because Kansas is cash basis, and I don't know if in Pennsylvania you were true cash basis, you had an accrual line, which you would have accounted for in encumbered funds. Actually, if you were doing it, that was probably where
right.
But because you're paying for your taxes due to the government as you go, this number and what you have in the bank will agree every year. And if they don't, you still need to pull your hair out until you find it. You need to call Lisa or call me, you know, hey, I'm going to retire at some point. Give me a call and see if you want me to come up and help look at your numbers.
Well, we had a hard time getting last year's end of year report worked right because of transfers.
Sure.
Transfers. It was really hard for both of us because neither of us. I love my bookkeeper, but her math brain is no better than mine. Balancing those, so putting it as an expense up here,
and an income, putting it as an income in this area.
Yes, and they cancel each other out.
So on this form here, you would show a line that says transfer, for example, transfer to general fund, and in the capital improvement you'd bracket your $10,000, and over here you'd show it as $10,000 of income.
Yeah, so Lisa helped us with that. So we added those two lines to our chart of accounts in QuickBooks, and that made a big difference.
Yeah. So this isn't the be all and end all, but it's easier for me to try to explain from something concrete. So get your stuff in there, maybe put your budgets, all of you put all your financial documents in there, and we can look at them and we could talk again at some point using your particular, you know, we'd have more things we could share specifically. Jerry, I don't know if you heard that. Mike is going to create a folder on the Google Drive that's going to say, you know, NEKLS District Library Financials. And if you upload all your stuff in there, then we can all look at each other's and make it right. Or make decisions about what we want to do.
All right, I didn't hear that, so okay.
Hopefully that invitation with the link hit people's.
I got mine, so it should be in your inbox.
Okay. But you can just, you know, drag and drop your stuff. You could make a folder for, in fact, we probably ought to make subfolders for everybody. And then you can just drag and drop your information over into it, and it just helps, you know, if you have it from your number base to make sense.
Kirsten, did you ever, so I don't know who else has been in a district long enough to answer this question, but has anybody else paid off a bond or has had like a significant decrease in your expense because of, you know, you paid off your building or paid off your bond or something? How long did it take you to get your, well, did you have to drop your mill, or did you find a way to reallocate and pad, which I couldn't do. We just didn't have that need.
Dropped.
So yours dropped. So then how many years until it kind of, you were able to get it back up?
Well, and that's the challenge, is because we have had a history of board members who some felt, and for a solid decade, they felt that what was most important was that we kept the budget dollars was the focus. And then we had people who thought that the mill levy should be the focus. And the people who thought that the budget dollars should be the focus. It was a pendulum swing. And because we didn't really know what to do once we paid off that bond, it was very early on in my experience, and I had no experience with it at all. The board didn't have any experience with it at all. Our mill levy was just a pendulum swing. It was either up or it was way down, and it was because of that unencumbered cash, which is now blowing my mind. And so now we try very hard to keep the mill levy straight at, or level, I'm sorry, and we try to target where that's going to be and focus less on the dollars generated by that. I don't know that that answers your question at all, but for many years our mill levy was up and then it was down, and it was a mess.
Did you have ramifications? I mean, did you have people coming in going, what the hell are you doing? You don't know how to run the, no, did you have any kind of like, or do people just not care and not notice?
Well, you have a group of people who care. You know, it's the good old boys who sit around the breakfast table and drink coffee in the morning, and they're sure
at the library.
funds. And so then they get somebody to come on the board and straighten us out. And then he comes on the board to straighten us out and realizes, oh, wow, that special districts form is a dandy. I can't figure that out, because people don't understand that we don't decide. We don't say our mill levy is going to be 3.571. And that's what it is. They don't understand that there's a formula involved and that we aren't the end all be all of that. And it's a very difficult learning curve because there's no way to explain it. If somebody can come up with a good definition of that formula, I'd pay big money for that.
How you funded 101.
Yeah.
Yeah, the one thing I would say is whenever you have a financing, you know, we paid off our building. So we had 7 years where we had, or 5 years, where we had building payments. But we also had long-term plans for that money when we no longer had a building to pay for.
Yeah, my board didn't have any of that.
And that's the problem. It isn't so much your problem this year is compounded because not only did you not have that expenditure, but it's a pandemic. It's just a totally crazy year.
Well,
so
yeah, we got a triple whammy. So.
Yeah, it's just, you know.
Which goes back to the question, and Mike answered it for me as best he could. The answer is no, Kirsten. Whether or not the state or the county is gonna take into consideration that we can't spend all of that money and we can't transfer it all to the capital improvement fund. And so therefore next year's gonna be a bear because it's gonna be significantly reduced by our unencumbered cash that we have to carry over.
Okay, so now ideas on that money. Number one, between now and the end of the year would be an excellent time to run all those reports on next for everybody else but Kirsten, for you on your ILS vendor. And it's an excellent opportunity to balance your collection. Because you can't tell me that you couldn't really, you know, this is an opportunity to put in some extra effort and fill the cracks.
We're replacing things. We're going to do a big Wonder Books order to try to spend another $1,500 on a new collection. And I took all of our unspent programming budget and put it dollar for dollar into capital improvement, or not capital improvement, into collection development. So
right.
our programming and collection line is the same, but all that unspent is going to be spent.
Yeah, it's an opportunity. I would look at digital collections that you could contract for 1 year and pay the money up front. If you wanted to, you know, look, you know, take a walk around your space. Is there landscaping that could be done? Even if it's done in the spring, will help you show the encumbrance. If you get an invoice from them that they guarantee will be the low end, you can encumber that money for that project for next year and expense it this year. That's what encumbrance does. Encumbrance is saying, I'm going to pay this bill with cash from 2020 in a special pocket up here, but I'm going to expense in 21, but I'm going to expense it in 2020. So I don't have a lot of unencumbered cash. You see here on this where I have a line for encumbered funds. If I had $28,000 of book orders that didn't come, that I didn't have the invoice for yet, but I put 25,000 in encumbered, so I didn't have another issue, I could expense 25,000 of it this year.
I have a question about that.
Yeah.
And this is me going back. We used to backdate. So in January, when we were paying bills in Pennsylvania, we would backdate things. So we would pay based on the invoice date, not on when it arrived. So in January, we would get all these Ingram bills that had December last year. So she would backdate the check. So the check would be 12/31 the year before, even though it was cut and signed in the next year. That's a nonprofit thing. That's not a gap thing.
Well, I think the safer way to do it is you could wait till you got those January bills, because you're going to have some idea of how much they are, right? So
Well,
if
yeah,
it's you know, you add them all up, it's 28,000. I would go back, and that's very early in January you get those bills.
Mm-hmm.
So I would then open up my December 2020 and I would do a journal entry that says pay to Ingram's 28,000 for these books. I'm putting it in a payable account. Because your cash basis in Kansas, you don't do accounts payable and accounts receivable.
Right.
But you're in essence creating an accounts payable to Ingram, and I'm going to expense it in 2020. Then in 2021, so I've got this Ingram. So in 2021, and I have this payable. So Ingram's payable. So then when I write the check to Ingram's and for that 28,000, I'm just clearing it out of the payable, which doesn't show up on any of your financials anywhere, other than this one here, where I would have shown 28,000 encumbered, and down here I would have shown $28,000 check in January to clear it, and it would be a zero.
But will it show up on my line item as collection development expense?
No, not in 2021, because you would have already spent. Yes.
Okay.
Yes. Yes.
Lisa, you're gonna have to help us with that.
Yeah. Well, what you should do is think of, it's called T accounting, and you could draw the line up through, and then you have credits and debits, and that's what QuickBooks does for you without having, you know, when you're writing the checks and making the deposits, it does it for you. When you get over into doing a journal entry, that's when you need to call Lisa, unless you're really comfortable with T-based accounting. Wouldn't you say that's true, Lisa?
Yes, and it sounds confusing and scary, but it's a real simple entry. So just holler at me if you all need to encumber anything like that.
Sharon, it's the same thing, only different.
Is anybody else going to prepay Hoopla? Like, you know, take an extra $2,000, send it to Hoopla, and
Definitely could do
pay it
that.
for next year? Okay.
Definitely could do that.
What
I would
about
recommend it.
what about this? I mean, because the biggest underspent line is going to be staff salaries. Because just like with Diana, we've got a position that was budgeted for but was never filled. So just tough toady frogs.
Well, you're going to overspend in some other lines, and you're underspending in salaries.
15,000. That's the
Well,
problem.
so you now know you have 15,000 to play. You know, the thing is to look at that cash flow and determine how many dollars do I need to find a home for?
33,700.
Okay. How much do you want to put in Hoopla? It could be a real budget help. You know, you start going through the things you need to do, the collection opportunities you have. This is a one-time, don't look at this as a problem. Look at this as an opportunity.
So subscribe to everything for the next 5 years. So like,
Yeah.
pay all of our.
So if you have,
journals.
you know, the software maintenance that, you know, you have, well, that's probably too late now, but different things as they come up, do 3 years instead of 1 year.
Okay.
Take the opportunity to do more now that will maybe help you if property tax collections come in poorly next year.
Okay.
Laura, this is Jerry. Are we allowed to use, you know, like to hire an architect for the future building? Are we allowed to use any of this extra money for that type of thing?
Sure.
Okay.
You could do a contract for so much to do some preliminary work and pay it out this year.
Okay.
Nothing says that you can't use money that you would normally use out of capital improvement, out of general fund. There are just rules on whether or not what you can use out of capital improvement.
Okay.
But the opposite isn't true. You can use general fund for anything, general fund and capital improvement fund. You can use capital improvement fund only for capital improvement fund, not for general fund.
That's right.
Okay.
Goes back. Does anybody, okay, so we all own our buildings for the most part. We're in charge of their routine maintenance. Does anybody have, what do they call it? The plan where you have an engineer come in, a civil engineer come in and go, here's when you're going to need to replace your HVAC. Here's when you're going to need to replace your water heater. Here's when you're going to need to replace your roof. Here's when you're going to need to replace your windows. There's a word for that, and I can't think what it is.
Yeah, a good building inspection, that's it. Yeah, get an engineer in there and look at all things structural. It's a great time to do it. And then that becomes part of your budget planning for years out.
So
Well,
who
yeah,
would you recommend to do that? Do you have an idea of?
I know who did it in Pennsylvania, but I don't know who
I
did
don't
it here.
think they would probably come this far, but.
No, I wouldn't.
You know, I think we could probably get in touch with Sabatini and they would recommend somebody. They might actually even have somebody on staff that does that kind of stuff for them.
I think it's called a capital plan or I'll ask Joaquin. He knows. We had it done for our condo.
We had it done for the library, and it is, I can't think of the terminology, but it is.
Well, for those of you with a newer building or if you do a major renovation, we will be collecting all the, you know, when was the water heater put in? When was the washer and dryer purchased? You know, the renovation books or the building books. So, and then you kind of go to do a building maintenance plan, a capital plan for your building over, you know, I would do 5 years. Things change.
Ours was 20. I mean, it was because of, roofs and tuck pointing.
Well, yeah,
and things like
long-term
that,
things,
but
I guess some parts of it would be long-term, but get it all in one place so when you need to know, when do we need to start thinking about that? Cast your eye out.
Diana, do you remember who did yours?
Yeah, our board members actually did it because we've got several contractors on the board. So they got together and put together a capital plan. I guess is what you call it, a capital plan.
I'd be interested in somebody coming.
You might even talk to your city and see if your city has a capital plan, because they should. Even a small city. Well, laugh, ha ha ha.
I'm gonna totally laugh at Linwood. Okay, I'll ask.
Well, you might see what they have.
What about the school district? Maybe that would be a better place to go to.
Probably would be a better place to go.
Okay. I feel like I'm forgetting something.
Oh. It's just really important to look at this as an opportunity. It's a painful opportunity, but it's an opportunity to get some things. The dollars never stretch far enough. And right now, while you have too many of them, I would look at things that could benefit you over a 2 to 3 year period. Something to help you get ahead of the curve.
I just feel like that horse isn't dead yet, so I'm going to beat it one more time. Are you ready?
Okay, sure.
Okay. You had to have had your earmarked money set already, correct? So Diana had to have had her, let's say it was 87,000, I don't remember, her $87,000 parking lot already planned for and budgeted for in 2020 in order to move it? Or could she say in 2020, you know what, we need an $87,000 parking lot, but we're not going to be able to do it until 2021.
Right.
And underspend in preparation for that?
No. Well, because we're all underspending.
Yeah, well, it's easy this year, but is that something on a normal year? Could you do that?
That's why I'm asking. So can we, if Sharon has $37,000 and it just so happens that a new parking lot or landscape something outside her library is going to cost $35,000, can she earmark that, or did she have to have already had it budgeted in 2020 in order to have it not roll into the unencumbered cash for 2021?
Well, it would still roll in as unencumbered cash, but then I would have a new expense line that says brand new trees, $35,000. So
I think what she's actually saying is, okay, so you've done the work and you really planned on $87,000 for the parking lot. You had some preliminary discussions, you'd gotten some quotes. That's why you budgeted $87,000. Now that didn't happen, but I still want to, I don't want to carry that money over. I have too much money to carry over. I could still do the parking lot next year. I need to spend that money. I can spend it on napkins if I want to. There's nothing in your budget planning that is cast in cement.
So I don't want to spend it on napkins. I don't want to spend money that I don't need to spend.
Well,
money.
I get that.
So is there really a problem with having it that large of a carryover after a year like this.
No,
I mean,
no.
yeah, I don't think reasonable people, and maybe that's a relative term,
Maybe the good old boys are not reasonable.
are going to say, I mean, I think you can make the case that, I was able to make the case to my board that we're going to carry this over and we're still going to need a parking lot once we have people coming back to the library.
That's right.
So we're even considering moving where we had it considered, but we're still going to have another parking lot, whether it's next year or the year after.
Right. That wasn't my question.
No, hers was if it's not planned.
Yeah.
Like on the fly or
Diana,
something popped up. Oh my God, we need a new roof.
Right. Okay. It's 2020. We need to get rid of money. Sharon has $37,000 she has to get rid of. Can she say, okay, so it has to have already been budgeted and planned, right? Even if you change it from a parking lot to napkins.
Well, she already had it. She already had a budget and it was planned and it didn't plan out, right?
Right. I understand. But she had it already in her budget.
Mm-hmm. But maybe not as one lump sum.
So Sharon can't say, I have 35 grand and I'm going to plant 7,500 trees.
I wish.
Even though that's not in her budget. She didn't realize she was going to need to spend the 37 grand when she was putting together the 2021 budget. So at the end of 2020, she can say, okay, I'm going to plant 7,500 trees and we're going to earmark it for 2021.
So she's probably got a maintenance line or some money that she can transfer money from the salaries, say for instance, and put it in the maintenance line and then say, okay, the maintenance line now has an extra 35,000 that we're going to spend on trees because that's maintenance. Right?
But that would be on the actual. I wouldn't be changing my budget line. Because I agree with Kirsten on this, that if I overspend a budget line, I want to see that I overspent it. I don't want to adjust my internal budget artificially just because of 1 year's blip.
Right.
So I would leave my maintenance line looking at the 5-year trend
and overspend
it and then have a little note that says we bought trees. And then have
you can have more carryover this year, and you're probably going to have more carryover this year. I am only saying that the carryover is right now. This year we had really good payment of property taxes.
Surprisingly. Yeah.
Right. And so maybe I'm looking at, I'm carrying that money over, and I will do my reassessment as I look at money that comes in 2021, because the majority of property tax money comes in from January to June.
So you're thinking next spring we might get a whammy?
Next spring you could have much larger delinquency than normal. We'll just have to see.
Okay.
And so it's perfectly okay to carry over a large amount. But if there are opportunities that you want to take to spend small pieces of it, like a 2 to 3 year service contract, do that, or prepay hoopla.
But when you say it's perfectly okay, it's going to screw with your mill levy.
But maybe not. If we have a higher delinquency, then we're going to have less income from tax income, so we'll have less carryover the next year. So are you saying that like within 3 years it'll work itself out? Like this year and next year are going to be blips, and then by 2022 maybe we'll be back to normal?
Or by 2023. I think that's why we're giving courier rates are going down a lot next year, and they're going to come up just slightly more in 2022. And we're not taking courier rates back to where they should be until 2023.
So we just need to accept that our mill levy is gonna zoop, zoop, zoop.
I think so.
That's what I hear you saying.
What,
Like-
no, what I'm saying is you may have a larger carryover to start the year. And as you get ready to evaluate the next year, when you're doing 2022 planning next summer in, May, June, when you're really looking at things, that's when you're estimating, what is my year really going to be? Am I going to eat all this carryover this year because I'm not getting tax money I thought I was going to get? Because you've already put in for what you think tax money is going to be next year.
So,
Right?
and if it comes in significantly, like if it comes in less than the 33,000 that I have as carryover, I'm going to be kicking myself in the butt if I spent it all.
Right.
Because I'm like,
I think you should anticipate a larger carryover. I think your goal in budget planning next, May, June is going to be to keep a mill levy that's steady, as close to steady as you can get it.
okay.
That's what we try every year.
Because ups and downs are going to really be the thing that attracts public comment.
They're hard. Yeah, they are. When it goes down, people get all kinds of excited. But what goes down must come up. Opposite, but it's true.
Yeah, well,
And
no, it's true.
And when it comes up, it can be within a point of what it was 5 years ago. And it doesn't matter because it went up from last year.
They're only looking at it year
That's
to year.
when you get the jabs.
Yeah. And then, we have the whole layer of what the legislatures may or may not do to us in this upcoming year.
Sweet Mary.
Because your districts, we're districts, all of us. And so we're particularly disliked.
And because they want our money. It's a power thing.
Right.
They're threatened by us.
Yeah.
Instead of embracing and celebrating what we can do for them, they're threatened and they want our monies. And they want it now. Okay, when are we going to meet? Oh, we're not, right? We're not going to meet in person ever again until the renovation is complete, correct?
Right.
And when is that?
We hope December. They're moving right along. They've gutted that first floor.
I feel like that I am not that I'm fully understood in person, but I definitely feel like I'm not getting my point across on Zoom.
So we are still on pace as of last week for December 1st completion.
Sweet.
And I was just typing up a message to Dan through Slack that he hasn't received yet, asking him how we could do this meeting better via Zoom, because we know that's always, I think it's always going to be a thing where some people are attending meetings in Zoom. And we've been looking at how we're going to improve our training room upstairs. I could see a great opportunity in Zoom if Laura could have illustrated this.
Mm-hmm. Drawn on
like
it.
Maybe even just writing it out. What would that look like on the screen?
Well,
so
I
don't know if that's related to what you're saying, Kirsten. I think it's
I'm
better when you can see things in person. And
I'm trying really hard not to be that person who annoys everyone because she has 800 questions, but I just
ask them all, because I have the same ones. What would benefit me, and not to disparage this, when I took a budget class through the PLA, they had the Anytown Public Library budget. So it was just a very generic budget, but it fit what we did. Not your budget is not our budget. Your budget has different categories. It doesn't resonate as well if it were a true public library budget with collection development and staff. That would resonate more with me, even if it's just a generic, you know, any town, use nice round numbers, everything's $10,000 so we can see how it adds up and how it subtracts. I would get the concepts better that way. So
Well,
that would
and
be my
when I
suggestion.
did that district budget, you might go back and listen to that after while you're all
I
thinking
have.
about. Well, so come up with things you want improved on that and let us know, or, you know, I'm all for as many collaborate. Let's make a really good one that suits all of us.
Well, yeah, I'm excited to see everybody else's, to see if we can come up with something that.
That's the one thing I didn't have was everybody's current all in one place when I did that. So,
Now we have that, right?
right now we have the opportunity to collect all that. So you have to realize that you are the majority of the district libraries in the state of Kansas.
You mean
Oh,
the
are we? So,
minority?
There are not very many in other places.
Yeah.
so we're special.
What'd you just say?
I said we're special.
No. What did Laura just say?
I said that you all are the majority of the district libraries in the state of Kansas.
Oh, so we're it.
You're not
Oh.
it, but you're the majority for sure.
Isn't
Okay.
Potawatomi a district?
That's a 2-county special district, and it's a totally different lemon altogether.
Lynn County.
It has its own statutes. It has budgets that go to the 2 counties. It's weighted, you know, so many percent is Potawatomi, so much is Waban.
So who else is like us?
Oh,
So we can grab their budget too.
Donovan County here? And
Donovan
Lynn
is-
No,
Donovan should be.
the only
but it-
district missing is Donovan from
And
NEKLS.
Lynn County, just south of us, is Janet
Are they
McReynolds.
Okay.
Is it McReynolds or Reynolds?
Uh,
You know who
I think it's Reynolds.
I think
I'm-
it's Reynolds. Yeah, Janet. And that's a district library, Lynn County.
Yeah, I don't know how theirs is set up. I know that is Ellenwood a district? No, it's a school public combination. I know there are some systems with absolutely no districts, and I know when we do I've only had maybe 2 other districts in all the years of doing Apple. You guys are really it. Because you have the population base with the housing that could support it.
What about Andale? I have the state statistics up. Andale Library District. It's in Sedgwick County, so I'm guessing it's outside Wichita.
Okay,
Yeah.
so that would be Tom Taylor, wouldn't it?
Lori Lane.
Okay. All right. Yeah, he's in Andover.
Yeah, the rest are us.
Yeah, but you know, district libraries are actually honestly a function of population, because you have to have the number of houses. You have to have, you couldn't, you know, like Winchester was wanting to look at becoming a district library. But theirs is such a rural population base. There aren't any nice, expensive houses sitting out there. They would lose more money. They'd have to raise their mill so much they'd probably get lynched. I mean, honestly, for what they get from us for a grant that they would lose, they can't make it up on property tax on pastures.
So how do we, is there a way to future, I mean, and maybe Diane already knows this, because there's development happening in southern Leavenworth County. So how do I find out how much that might be? Like, who do I call? Who do I ask about developments and how we think our property taxes, or how many new homes we think are going to get built in our area that would improve our tax base.
Well, I would talk with the school district and see what they're projecting for population of students. Be the first place I would go. I know that the state, and it would be, that would be less useful. I think having good talk with the county clerk about what they see as valuation trends, what they're using for county models. I would say your district, Sharon, I don't know if you know it or not, but it's already been enlarged once. It's changed its boundary one time, and it's the only district I know that has. I think maybe that's really much more an iffy thing. If you've already got a logical district set up, I think right now, with as upset as everybody is about any kind of change, I would sit on it. People fall to pieces over very little anymore. So something changing like that would be much more complicated, I think. Trying to think if there's anything else you let me share this. Does that pop this up without me having to reshare? What are you looking at right now? Expense by category, or can you see anything?
Can't see.
Okay. All right. Last thing I wanted to say. So as you're looking at, we've expanded this. It used to be one page, now it's not, because we do expenses by line item. Then we pull the courier out. This is something we started doing since Lisa got here. And I really like it, because if the courier went away, then we take those same expense dollars and we put them in the program areas so they can see how much we can see at a glance. Those things from the treasurer's, the actual budget we use, the program areas. So we're looking at expenses by program. This is where you're going to be next year living a lot, is what does my income look like? And so if you don't have good income tracking now, between now and the beginning of the year, I would get something in place. Because I think tracking what you've anticipated from your published budget to what you're going to get, and you all know when you get your money. It's January, March, May, end of May, June, September, October, and November or December. So you need to watch this, because I'm concerned that the amount of property tax could be less, the delinquency rate could be higher, and you won't see those delinquency taxes for a year. I mean, if somebody goes delinquent in the current year, I don't know that they get that made up for 1 or 2 years. I think they have to be delinquent so many years before they can be sold for back taxes. And the other key to look at will be when you get your motor vehicle estimates. They usually come out in May, end of April, and in May. See if those are trending up or holding steady or decreasing. We probably ought to, be a good thing to get together next year in May even, or early June as you're with budget, and kind of look at your trends to date and what they're telling you. So anyway, you really, this is a year to make sure you have all the good pieces. You have a budget in place for the expenses of all your funds. Then you're comparing itemized budget in larger categories to expense, and you're really tracking income. Next year is going to be a harder year than this year, believe it or not. And you can pull money out of capital improvement for operations. Read the handybook on capital improvement.
So we can treat it like a savings account?
Yeah, school districts do. Read what's in your the handybook. It used to be called the handybook. Public Library Handbook.
Mm-hmm.
Read the section on capital improvement. You can't spend directly out of capital improvement for operations, but you can transfer money from capital to operations and then spend it on operations.
Okay.
The link to the handbook is in the chat here.
I have it in here. I use it all the time. All the time. Okay.
And you're all going to have a financial review or an audit at the end of, at the beginning of next year, right?
First one ever.
You can send out requests for RFP. You can ask for a cost estimate. Send it out to accountants. I would think your first question is, do you do governmental accounting? If the answer is, do you audit for government entities? And if they say no, you don't want them.
We use Sean Gordon, who's the same guy that did, well, he's doing the city and he did Lawrence Public, and he was pretty good.
So he does other government entities. So.
Mm-hmm. Yeah, he was really good with the gap and understood and gave us some good journal entries to do. So is there anything end of year that we have to do as district libraries? Like approve anything, make sure something else is on the board docket in the budget process?
You've all done your gap waiver for this year, right?
I did.
Yeah. Well, you can do them anytime during the year. I usually try to say do them in January or February and get over that. Get past it. But if you haven't done that, you ought to pass a gap waiver. And you should probably start to think about who's going off the board in March, honestly. If anybody's indicating, you guys don't have term limits on your board, which is good or bad. And bad, probably good and bad.
I think Sharon inadvertently dropped off this meeting. So
Well,
Jerry, the four of us are just talking to you directly.
Yeah. So I don't have anything more to say. I'll stop sharing.
I'll go ahead.
There was part of the meeting, Jerry, that you missed, and they hit record. And so I think that they could probably share that link.
So if I hit stop recording, what's going to happen next?
it should start processing the video.
Okay, so I'm going to do that now because I think we're finished.
Okay.
Do you want to stop cloud recording? I'll receive an email notification when the cloud recording is ready. Okay.